Well, people were talking about Meta stock when it was near $100 a share and saying, boy, the metaverse may be a big money pit, but Facebook and Instagram and WhatsApp are still printing cash.
Yeah.
And that was a sentiment that was rewarded. And again, you don't just, as an investor, want to look at the headlines. You want to look deep into the company's financials. And that is still a cash factory. Not as much as it was when we were all locked down, but that sort of makes sense. But again, Facebook saying a lot of things that investors want to hear. We're still profitable by a wide margin. We're buying back stock now that the value is low. And again, what do investors want to hear? They want to hear what's coming up next. And coming up next is a more frugal Meta. And that's what they really wanted to hear from Zuckerberg, I think.
A more frugal Meta that also now has 3.25 billion users.
Right.
And they seem to actually be using it more. Hi, everyone, and welcome to the Friday, February 3rd installment of the Silicon Insider, the only uncensored look at life and business in the Valley. My name is Mike Malone, and I'm here with special contributor Scott Budman, technology reporter for NBC Bay Area. Our producer is Jordan Henderson. Our East Coast correspondent is Bob Grove, and our host, as always, is the Silicon Valley Business Journal. Okay, Scott, if I'm out of breath, it's because I'm running around looking at numbers and everything else. And this must be a crazy day for you.
Yeah, it really is. It's been a big week for earnings. Today, we got Alphabet. We got Apple just a few minutes ago. We got Google's numbers. I said Alphabet, YouTube, Google all together. Also Amazon, Starbucks. It's been a big day in a big week. Meta came in on Wednesday, said that stock's soaring. And so we're seeing kind of both ways. Some companies doing well enough to bring investors back, others not doing as well, I think, as investors expected.
Okay, well, let's go through them. Meta's the big one, I think, this week because it's unexpected. No one thought they'd come back this big. And they seem to be doing at least one interesting trick to keep their numbers up, at least their stock price up. Okay, so Meta came in at what level?
They came in better than expected. And the most important thing, and remember, a stock price is based on what the future holds.
Yes.
And for a while, the last couple of years, the future was just spend on this metaverse. And investors were angry. And I imagine Zuckerberg heard about this from all sides. Hey, you've got to cut spending. They did, most brutally, by laying people off. They laid off more than 10,000 workers. But then during the earning report, they even said not only a stock buyback, which makes the shares that are out there more valuable.
$40 billion stock buyback.
Right. We're dealing with a lot of money here with Meta at this point, but also a promise to curb spending on the Reality Lab part of the company, which is the metaverse. And that's really what investors wanted to hear. So you sort of had a reversal to why people were selling. And they came back in on Thursday and bought with both hands.
Stock went up 20%, which, that's, what was it, $80 billion of returned value to that company's stock? That's
close to 100 billion. And it's interesting. It was 1 year ago. It was February 3rd of 2022 that Meta, had to admit numbers were down. Apple was cutting into its ad revenue. The metaverse was a big hole for money. And they lost, I believe, 26% of their stock value in one day, nearly 200 billion at the time. I checked on Thursday. Meta was up at 1.26%, and it had gained more than $100 billion in a day. So what a difference a year makes when you listen to people who are saying you're spending too much money on something that really doesn't give anything back yet.
This must have killed Mark Zuckerberg, though. He gets a whole lot richer, but metaverse was his baby. And he was going all in. He was betting the company. He had lost talented people and everything else. And now the stock market's saying, you got to stop being crazy. And he said, okay, I'll stop being crazy. And the stock market just loves the company all of a sudden.
Well, this is why CEOs and even companies as a whole sometimes don't want to be public, because they don't want to have to listen to people who say, even if the long-term vision is a good one, they're going to hang out by the sidelines and say, look, you're losing too much money right now for me to be an investor. And, Zuckerberg, because he runs one of the largest public companies, has to listen to those voices. And he did. And he and the shareholders were richly rewarded for it.
I think every CEO of a public company looks longingly at the Mars family, Candy family company, private for over 100 years. They don't have to tell you anything. And it must be nice to operate that way.
Well, it's interesting that you mentioned Mars, because isn't this the week that recently M&M's sort of almost caved into Twitter pressure, not because they're a public company, but because they just got so much backlash dressing up the M&M's as various things. And now, they're sort of pulling back on that. So again, we listen as companies to voices when they get loud enough. And this, whether it's M&M's or Meta, I think is proof that the squeaky wheel can get the grease and get some results done.
Go real quickly. Fourth quarter revenue for Meta, 32 billion versus 31.65 expected. Adjusted earnings per share, interesting. Only $1.76 versus $2.26 expected. Normally you see a slight increase in quarterly revenues and a major drop in earnings per share, and you think that stock's going to get killed. And the market's acting very differently now. It's sort of like we're getting out of the insanity after COVID, and now these companies finally seem to be aligning themselves business-wise for a new era. And I think investors are just jumping into these stocks, even if the numbers aren't that great, just to be on the ground floor of the next big turnaround.
Well, people were talking about Meta stock when it was near $100 a share and saying, boy, the metaverse may be a big money pit, but Facebook and Instagram and WhatsApp are still printing cash.
Yeah.
And that was a sentiment that was rewarded. And again, you don't just, as an investor, want to look at the headlines. You want to look deep into the company's financials. And that is still a cash factory. Not as much as it was when we were all locked down, but that sort of makes sense. But again, Facebook saying a lot of things that investors want to hear. We're still profitable by a wide margin. We're buying back stock now that the value is low. And again, what do investors want to hear? They want to hear what's coming up next. And coming up next is a more frugal Meta. And that's what they really wanted to hear from Zuckerberg, I think.
A more frugal Meta that also now has 3.25 billion users.
Right.
And they seem to actually be using it more. So, I mean, if I was looking at it, I'd say maybe Zuckerberg woke up from his fantasy land of the metaverse, and maybe that'll happen 5-10 years from now. But right now, this is actually a really good investment.
Right. And it just depends. Do you want to please investors now or try to convince them to hold on for something that may be bigger 5 years from now? And this is Facebook capitulating to those investors and saying, okay, we're not going to completely stop Reality Labs, but we're not going to make it such a focal point of where our cash goes. And investors really liked to hear that. Saying a $40 billion stock buyback is saying that's $40 billion towards you, the investor, not towards the metaverse. And I think people really like to hear that.
Yes. Okay, let's go to Alphabet Google. Missed on earnings, missed on revenue, and YouTube is really starting to feel the pain of TikTok. How are they doing at the moment, at this second? You're right on top of it right now.
Well, so in the after hours, and they reported their stock down about 4%, similar to what Apple is seeing. This is after a pretty decent run up over the last couple of weeks. Again, Alphabet was one of those companies, like so many others, that were rewarded by laying people off and showing that they can cut costs after coming out of the pandemic when they just hired like crazy. And I think this earning report shows not necessarily a huge trend, but just, hey, post-pandemic, we should have expected this. Things are a little bit slower because people have other things to do with their lives instead of just surf on YouTube. And you're right, TikTok is one of those things. But also, just going outside is going to affect the bottom line of these software companies.
Okay, so revenues were pretty flat. They were down 50 million below what was expected. Earnings per share, though, 105 versus $1.18. That's not pretty. YouTube advertising revenue, 7.96 billion versus 8.25 expected. Google's looking like a company that's kind of stalled for a moment. It's experiencing the secondary effect of layoffs. I mean, you get the initial financial advantage of a layoff, but then you got to deal with all the actual layoffs and everything else. Not too bad, but you expect more from Alphabet Google at a time like this.
I think they have a couple of headwinds. I would push back on that. I think this is a tough time for Alphabet right now for a couple of reasons. One, coming out of the pandemic, they have layoffs. People see that it's a company that's vulnerable. They're human, right? They struggle and they lose money sometimes too. But also, and so right, they're struggling against TikTok. But look out into the future, and what do you see? You see AI, and you see nimble companies, like OpenAI, which owns ChatGPT, beating Google to a punch that Google had the advantage of on a long time. Remember their whole Lambda AI project, and they sort of soft pedaled that. And I think as a gigantic company that doesn't move very fast, this is an example of a startup eating the lunch of a giant company, and Google has to respond.
Well, the CEO of OpenAI came out publicly this week and said, we are going to replace search. Which is an astounding claim to make when you're up against, a giant like Google. But we've seen this throughout the history of technology. You don't beat a company head on. You beat a company by doing an end run with a new technology. And that's now the fastest growing company in the world is OpenAI in terms of user numbers. Google better be writing a lot of code right now to get back into that game, because literally their core product could be completely obsoleted by this new AI world that's coming into vogue.
Right. And this is a company that gets its revenue through advertising, and it's losing advertising to TikTok. It's losing advertising to a tough economy. And in a tough economy, companies cut back on ads. So that's hanging over them as well. But also, right, is it going to lose some of that revenue to the next wave of search, which is partially TikTok and perhaps this ChatGPT and AI? So they have some struggles looking ahead.
Okay, so stock was down, what, 2% after hours? Is it still down just 2%, or has it come back up?
No, Google is still down by about 4%, and
4 now.
I should say Alphabet. And again, this is a bounce from a really, really big run, over the last couple of weeks. But they're human, and I think these earning reports, some companies like Tesla were like, oh, please get to the earning report so we can show people we sold more cars than they expected. Other companies like Google had to be kind of dreading this, saying it's going to point out all of the headwinds we're up against right now, and that's why investors are shying away.
Okay, Microsoft.
Well, Microsoft, that was interesting. So their earnings were strong. They had layoffs.
That was a few days ago,
Yeah, and they saw their stock price richly rewarded. In fact, they went up huge. They went up about 5% on Thursday, without any news of their own, but the meta news was so strong. I think it just went over to people saying, the sell-off is over. Microsoft is almost a $2 trillion, almost a $2 trillion company in its own right, threatening Apple's top spot. They just have grown and grown. And that's a really big comeback for a software company after software really got hit hard post-lockdown.
Okay, let's do semiconductors before we get into Apple. Interesting mixed results in the semiconductor world. AMD killed it, as they keep doing. I mean, their stock was up, 7% by Wednesday as soon as they made their announcement. They're in great shape. I mean, Lisa Su has, even though, let's see, they fell short of estimates by $150 million, but I think in the chip business, that's pretty good news, because Qualcomm also, was coming out with bad numbers and predicting a bad year ahead. AMD, so they're up. They're doing great. Meanwhile, Intel went the opposite direction. I mean, if the numbers this quarter at Intel were an indication of anything, Intel's in serious trouble. I mean, you have people on Wall Street talking about a historic collapse of the company's stock. It shows, you talked about headwinds a few minutes ago, but it says that you know, Intel may never get back out of away from this headwind. I mean, Gelsinger's always attempt to turn the company around. Looks like if it's ever going to happen, it's going to take a lot longer than expected. And we're now at the point where the company executives are taking salary cuts, compensation cuts in order to salvage something out of the firm. What do you think? Is this the end of Intel? I mean, should we be even thinking about Intel as a major player in the Valley anymore?
Hard to say. I mean, people did say that about Apple some time ago, and they came back strong, but Intel needs that kind of a comeback. It's just not relevant right now. I mean, you look at the mobile world that's dominated by Qualcomm and NVIDIA. Even the straight chip world is more AMD right now than Intel. And it's just shocking to say these things, but this is a company that just can't find the path to relevance and the path to big sales and big numbers. And even the smaller semiconductor companies are coming up on them. And I don't know if it's because they just got too big to move with the times, or they just catastrophically miss things, which has happened before. And they've come back from that before, but have they ever come back with such strong competition before? That I don't know. And there are a lot of really, really strong semiconductor companies that grew even during the lockdown because we were buying more software and more hardware. They grew because of things like EVs and all the electronics that are in cars. And Intel has just really missed the boat on that. And even Apple, which turned to Intel chips, is now doing things on its own. So where does Intel succeed as a leader?
Where do they fit in the modern ecology of electronics and even in semiconductors? I don't know if they found their place.
It's a good question. I don't know that they're relevant as a leader in anything right now. And that's an uncomfortable, unusual place for Intel to be, to have to come back from irrelevance.
When you've been the front runner for 50 years. I don't know if they know how to get back into first place. I don't know if they have the corporate culture anymore. Okay, on the Qualcomm thing, there was an interesting piece of news which may have impacted the value of Apple stock today. Smartphone shipments are down 18.3%. Apparently, upgrades are way down. People are just saying, the economy doesn't look good. I don't have that much disposable income. I'm not going to upgrade my phone right now. I'm just going to, let it get dirtier and full of crumbs and everything else. And I'm just going to hold on until, the economy comes back and I have the kind of money I can get the next model. Well, that's a major hit all the way up the food chain and over into semiconductors too. I mean into also software. Is that what hurt Apple, you think?
It is. Sales of iPhones were down, sales of Macs were down, and therefore their revenue was down by quite a bit.
Yeah, earnings and revenues both down 10%. That's huge.
Yeah, it was a rough quarter for Apple, and they're the leaders in those things you just talked about in hardware devices.
Yeah.
And so if they're down, it makes sense that Qualcomm struggles. It makes sense that the chip equipment guys struggle. It's a big ecosystem, and Apple is such a leader. And for it to struggle, which is not entirely surprising, given, as you say, the pressures on people, to buy just groceries, not to mention $1,000 cell phones, is high right now. And it's a tough time. And we're not anywhere near right now the holiday shopping season. So this could be a rough gulf for, a company like Apple that needs people to say, I've got an extra $1,100. I'm going to upgrade on something that actually works pretty darn well.
Yeah, well, maybe everybody's now beginning to follow the way that you buy phones, which is you always buy a generation late and get the good deals. Are you going to upgrade? I mean, that's even a question for somebody like you. Are you going to stick with your one generational behind phone, or are you going to move to the one to stay at a 2 generations behind?
Right, I'm two and a half generations behind right now, and even offered my teenager this phone for free, and then I'd upgrade, and she said, I don't need a new phone right now. And that's offering a teenager free electronics. So when I heard that, I
You
thought,
may be the canary in the coal mine and all of
yes,
this.
indeed. So yeah, that was a surprise. And I take these conversations that are personal and turn them into business things and think Apple's got a bit of an issue right now because people just aren't thinking about upgrading their electronics as they usually do, and that totally makes sense. And look, if people are starting to follow the example of a street reporter, that's maybe good news for savings, but not good news for Apple that, needs people to spend $1,100 and $1,200 on new upgrades.
Exactly. Overall, the S&P 500 total earnings are up about 1.5%, but the proportion of those beating their EPS and revenue estimates is only 53% versus the usual 60%. What held everything up, interestingly, was not electronics, but energy. Energy numbers are still good, and that kept the market from completely collapsing over this stuff. Minus 4% on stock price seems to be the typical hit across electronics. That can be made back with a good quarter. So we'll see. But right now, where's NASDAQ at the moment as you're looking at your computer screen?
Well, the NASDAQ had a really, really good day today based on those Meta earnings. And I think, it was up 3.5%, up nearly 400 points on a day where the Dow was in the red. So
Yeah.
this was
Yeah, that was a very interesting mismatch that the NASDAQ went up a whole lot while the Dow was not doing, it was bleeding.
Right.
You
Well,
don't
this
see that
week,
often.
I think this week was the first real tech snapback since all those layoffs.
Yeah.
And it was layoffs followed by, in many cases, Apple being an exception, both to layoffs and to a strong earning report, but in many cases, layoffs followed by better than expected earnings. Again, what do layoffs do? They lower that bar of expectations. The earnings came in a little better for a lot of these companies. You saw, just companies across the board do really well for their investors. Tesla up some 80%, since its lows. Meta just about doubling since its lows. And again, these are lowered bars, but still, that is for these big companies a whole lot of money changing hands all of a sudden.
Yeah. Meanwhile, consumer discretionary spending is way down, which is probably a reaction to those tech layoffs. And if you see a lot of layoffs going on, first thing you do is you don't start buying, expensive birthday presents and that sort of thing. So that may have a long-term effect. Interestingly, mortgage rates have fallen for the fourth straight week, down to hovering around 6%, which may explain why all the houses in my neighborhood that were up for sale all of a sudden were sporting sold signs this week. That may be an interesting turn in that direction. We're getting these weird contrary indicators happening right now, and they haven't quite resolved itself. And I think it's because we haven't quite resolved what the situation is in our economy.
No, we have not. We had another interest rate hike just this week. Smaller, 0.25%, perhaps signifying that the big rate hikes are a thing of the past. But, you listen to Jerome Powell, the Fed chair, say inflation is still here. That's a concern. Prices are still high. And they did not say they were done raising interest rates. And that puts, prices higher. It puts your credit card debt higher. It, could put mortgage rates back up above 6%. You never know. But they're still right at about 6%. And that means just about double what they were a year and a half ago. And, I'm glad to hear people are buying and selling homes in your neighborhood. I just wonder if even 6% is psychologically a thaw, given the fact that home prices in the Bay Area are down about 15% from recent highs.
Right.
So maybe people are making that jump from the sidelines, but I know they want to see, because I hear this all the time, they want to see lower mortgage rates first.
Well, sure. But in that calculus, price drop versus mortgage rate slight increase, you got to go, maybe this is the moment to get in before those house prices come back.
Right.
Okay. Real quick on the frothy department. I love your term frothy is now being used around the world by journalists. Fortune magazine just came out with a wild theory that the price of Bitcoin is being artificially propped up. That the same academic who looked at found that manipulation in 2017 suspects that it may be happening again. Could
Look, you're asking a critic of
yeah,
Bitcoin in general. Is it artificially propped up? Has it ever been anything other than artificially propped up? I mean,
yeah, exactly. I thought that would be your answer.
right. I mean, there is something to be said for the fact that Bitcoin hit 24,000 in a very optimistic week for tech, and people are jumping back into that as well, even as FTX is on its way to court. Other companies, the Winklevoss guys are going bankrupt. It's amazing to me that Bitcoin, which by the way is still a third of where it was a year ago when we were talking about the Super Bowl, as we talk about this now, but still it went from about 16,000 after the FTX bankruptcy to about 24,000. But really, what's propping it up other than vast amounts of optimism and hope and fervor and frenzy? And if that's not artificial, have at it. Maybe make
the
that
optimism of the potential for easy money.
right.
Okay, finally, and this comes from Bob Grove back east. I don't know if you saw this story, but it's one of these warnings about the application of technology. There's a high school out in his neighborhood in Western Massachusetts. You know the story. You're already that in their wisdom. I mean, we've all been to meetings in Silicon Valley companies where they have those automatic light sensors. And so you sit in a room, you're in a meeting, and all of a sudden everything goes completely black and everybody's frantically waving their hands to turn the lights back on automatically. Well, the geniuses of this high school, as they were remodeling it, decided to make that the universal way of turning on the lights in the school in order to save power. And they thought, well, if we have automatic lights, we don't need light switches. Well, as usual, a bug in the software, which can't be fixed because the company that made the software, the buggy software, is gone. Typical tech way. And so now the school, all of their lights are on 24 hours a day, 7 days a week. I think they've been on almost for a year, costing that school hundreds and hundreds of thousands of dollars that could have been fixed with like $200 worth of light switches on the wall.
I mean, look, technology can be wonderful, and you and I have made careers on that. But what do we end up talking about a lot? How technology grounded an entire airline a couple of months ago because it was too old and wasn't working right. On a smaller scale, these poor guys can't turn off their lights. Ask anyone who's driven an EV and who loves the fact that they're helping, but everybody feature creeps technology into things, even our phones. And it is not a day that goes by when people don't come up to me and complain about the technology that they use. It's a two-way street.
And this one's beautifully symbolic for some reason in an educational institution.
Yes.
All right. That's it for now. Scott's got to get to more interviews on this week's stock numbers. That's it for now, folks. You can find us on the Silicon Valley Business Journal homepage, as well as on Spotify, Anchor, Google Podcasts, Apple Podcasts, LinkedIn, and YouTube. Have a great weekend. Bye-bye.